Hello everyone. Today, let's look at the market news update regarding the Federal Reserve's interest rate hike. In suspending its previous plans to continue raising rates this year, the Federal Reserve signaled that its march towards higher interest rates may be ending sooner than expected. The Federal Reserve's chairman, Jerome H. Powell, said economic growth remained solid and the central bank expected growth to continue. But in a sharp reversal of the Fed's stance just 6 weeks ago, Mr. Powell said that the Federal Reserve had the luxury of patience in deciding whether to raise rates again. The case for raising rates has weakened somewhat, Mr. Powell said, pointing to sluggish inflation slowing growth in Europe and China and the possibility of another federal government shutdown. The Fed left its benchmark interest rate unchanged at its first meeting of 2019, a decision that was widely expected. What surprised markets was the indication that rates, which are in a range of 2.25% to 2.5%, may stay put for some time. Investors expressed their enthusiasm around the globe early Thursday. Major Asian markets like Japan and Hong Kong rose by about 1%, and European stocks opened higher. Future markets that try to predict stock performances indicated that Wall Street would open higher too. On Wednesday, the S&P 500 stock index climbed sharply after the Fed announcement and ended the day up by 1.55%. Yields on shorter-term Treasury securities, which are heavily influenced by Fed policy, declined as investors concluded that any near term interest rate increases were off the table. For the last several years, the Fed has consistently said that it planned to keep raising interest rates. The pace was uncertain, but the direction was clear. Wednesday's statement omitted previous language indicating that some further gradual increases would be warranted. Instead, it said the Fed would be patient in evaluating the health of the economy, and it suggested the Fed stood ready either to raise or to cut rates depending on economic conditions. Reinforcing this more cautious tone, the Fed also announced in a separate statement that it was prepared to slow or even reverse the steady slimming of its bond portfolio. This too was a striking shift. The Fed said in December that it was committed to steadily reducing its holdings of treasuries and mortgage bonds, which it amassed during the financial crisis to help boost the economy. The Fed's policy-making committee voted unanimously for these changes. The Fed officials had signaled the shift in their thinking in recent weeks, aligning on the theme of patience with unusual consistency, leaving little doubt of their intentions. Thank you for watching this video. For more videos on stock market and trading, please subscribe to this channel. If you would like to create a free Demat account, click the link on the description and please fill out your details.